What would happen if the reward you receive for your work suddenly got cut in half? Imagine clocking in at your job, working the same hours, exerting the same effort, yet receiving only half the paycheck at the end of the month. It's a chilling thought, isn't it? But here's the twist. This isn't a dystopian novel or a cruel social experiment. This is a reality in a digital universe known as Bitcoin, a reality that unfolds every 4 years. Welcome to the concept of Bitcoin halving. Imagine a gold mine, but this one's not in the mountains or underground. It's in the virtual world of Bitcoin. In this digital landscape, we have miners, not with pickaxes and hard hats, but with powerful computers. These miners perform complex calculations to validate transactions on the Bitcoin network, a process known as Bitcoin mining. As a reward for their computational efforts, miners are given Bitcoins, much like how a gold miner would strike gold. Now, let's introduce a new concept, Bitcoin halving. It's not as complicated as it sounds. Picture this. You're a miner, and for every block of transactions you validate, you receive a certain number of Bitcoins. But every 4 years or so, something interesting happens. The amount of Bitcoin you receive for your efforts is cut in half. That's right, halved. This is what we call Bitcoin halving. But why does this happen? Well, it's written into Bitcoin's code as a way to control inflation. Bitcoin was designed with a finite supply of 21 million coins to ensure its value. The idea is, by halving the reward, the rate at which new Bitcoins are created slows down, maintaining scarcity and value. It's like if a gold mine suddenly announced that for the same amount of work, miners would receive half the gold. It's a shock, yes, but it's also a way to make sure that the gold doesn't lose its value because of overproduction. So, Bitcoin is not just about mining. It's a carefully calibrated system that aims to strike a balance between encouraging active mining and maintaining the currency's value. The halving event is a clear illustration of this principle, a pre-planned economic policy running on autopilot. In a nutshell, Bitcoin halving is a key event in the Bitcoin world. It shakes things up for miners, influences the rate of new Bitcoin creation, and is a testament to Bitcoin's deflationary nature. So, Bitcoin halving is essentially a 50% reduction in the amount of Bitcoin that miners receive as a reward. And that, in its most simplified form, is what Bitcoin halving is all about. Now you might be thinking, why does Bitcoin halving matter to me? Well, let's dive into that. The impact of Bitcoin halving is multidimensional. It affects the supply of Bitcoin, its price, and the overall Bitcoin market. It's a bit like a carefully played chess game where one move can change the entire landscape. Firstly, let's look at the supply side. Bitcoin halving directly affects the rate at which new Bitcoins are created. The event reduces the reward for mining a block by half, which essentially slows down the rate at which new Bitcoins are generated. This scarcity is a core part of Bitcoin's appeal. With a finite supply of 21 million Bitcoins, the halving event ensures the digital asset doesn't inflate indefinitely. This leads us to the price. In theory, if demand remains constant, the decrease in supply should push the price up. It's the classic economic model of supply and demand. The reality, however, is a bit more complex. The market is influenced by a host of factors, including market sentiment, geopolitical events, and the behavior of other cryptocurrencies. But historically, Bitcoin halvings have led to significant price increases. The halvings in 2012 and 2016 were both followed by substantial bull runs. But remember, past performance is not an indicator of future results, so it's always important to do your own research. Now let's talk about how Bitcoin halving can affect both miners and traders. For miners, the halving means they receive fewer Bitcoins for validating transactions. If the price doesn't increase to compensate for the reduced reward, mining could become less profitable. For traders, the halving creates opportunities. The event is often accompanied by increased volatility, which can lead to price swings that traders can potentially profit from. However, it's essential to remember that with opportunities come risks. The Bitcoin halving impacts everyone involved in the Bitcoin ecosystem, from miners to traders to even casual investors. It's a fascinating event that offers a glimpse into the inner workings of the world's first decentralized digital currency. This isn't a new phenomenon. Bitcoin halving has happened 3 times before. Our story begins in 2012, the year of the first Bitcoin halving. Back then, Bitcoin was still a fledgling concept, and the idea of a digital currency was just starting to take off. After the halving event, the Bitcoin price saw a significant rise, shooting up from around $12 to over $270 in the following months. The world began to take notice. Fast forward to 2016, the second Bitcoin halving. At this point, Bitcoin was no longer an obscure tech experiment. It had begun to establish itself as a legitimate alternative to traditional currencies. Post-halving, the price of Bitcoin skyrocketed once again, this time from around $650 to a staggering $20,000 by the end of 2017. Then came the third halving in 2020, amidst a global pandemic. Despite the economic uncertainties, Bitcoin proved resilient. The price was hovering around $8,500 prior to the halving. By the end of the year, Bitcoin had smashed previous records, reaching a breathtaking high of almost $30,000. So what can we glean from these previous halvings? Well, each halving event has been followed by a significant surge in Bitcoin's price. These price surges have brought increased attention to Bitcoin, driving its adoption and acceptance worldwide. However, it's also important to note that while the price tends to rise after a halving, it doesn't happen immediately. There is typically a lag period, a buildup if you will, before the price starts to climb. Of course, it's crucial to remember that past performance is not indicative of future results. The cryptocurrency market is volatile and influenced by a myriad of factors. But observing the historical context gives us valuable insight into the potential impact of future Bitcoin halving events. As history has shown us, Bitcoin halving events have been significant catalysts for the cryptocurrency's price. The next Bitcoin halving is around the corner. Are you ready for it? As we delve into the world of Bitcoin, it's essential to stay ahead of the curve, and preparation for the next halving event is a crucial part of this. But how exactly do you prepare for such a significant event in the cryptosphere? For miners, the key is to anticipate the change in block reward and adjust your operations accordingly. When the halving occurs, the reward for mining new blocks will decrease by 50%. This means that miners will need to evaluate their cost efficiency. Are your current mining operations sustainable with a reduced block reward? It might be time to consider upgrading your hardware or seeking out cheaper energy sources to maintain profitability. For traders and investors, the halving event can present opportunities for strategic investment. Historical data shows an increase in Bitcoin's price following previous halvings. However, remember that past performance does not guarantee future results. It's essential to balance optimism with caution. Understanding the market sentiment leading up to the halving is vital. Keep an eye on how the community is reacting. Are people excited, fearful, indifferent? These emotions can drive market trends, and being in tune with them can help you make informed decisions. It's also crucial to diversify your investment portfolio. While Bitcoin halving can lead to price increases, it's not a sure thing. Diversification can help to mitigate potential losses. Finally, remember that knowledge is power. The more you understand about Bitcoin halving, the better equipped you'll be to navigate the changes it brings. Keep learning, stay updated, and don't be afraid to ask questions. The world of Bitcoin is complex and ever-evolving. The halving event is just one piece of the puzzle. By understanding it and preparing for it, you can position yourself to take full advantage of the opportunities it presents. Understanding and preparing for Bitcoin halving can give you an edge in this volatile crypto market. Bitcoin halving is not just a technical event, it's a defining moment in the life of every Bitcoin enthusiast. Let's take a moment to recap what we've covered throughout this video. We started by unpacking the concept of Bitcoin halving, breaking it down into its simplest form. It's a process that effectively halves the reward that miners receive for verifying transactions and adding them to the Bitcoin blockchain. This event occurs approximately every 4 years, and it's a vital part of Bitcoin's protocol to manage the supply of this digital currency and prevent inflation. From there, we delved into the significant impact that Bitcoin halving has on the crypto ecosystem. It's not just about reducing the miner's reward, it's a trigger that influences the market dynamics of Bitcoin. Historically, halving events have led to substantial price increases due to the reduced supply of new Bitcoins entering the market. Finally, we explored how to prepare for the next Bitcoin halving. It's crucial to stay informed, understand market trends, and make educated decisions based on reliable data. This preparation can help you navigate the volatile waters of the Bitcoin market during and after a halving event. So there you have it. Bitcoin halving is a complex yet fascinating aspect of the cryptocurrency world that has far-reaching implications for miners, investors, and the market as a whole. Remember, in the world of Bitcoin, knowledge is not just power, it's profit too.